Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently and what I think is likely to happen next. We'll be covering the 1 hour, 1 day and 1 week timeframes, jumping into some news and data around ADA and all that wonderful stuff. So as I get into today's video, if you find it useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, what are you waiting for? Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there. If you're watching this on X, then why not go ahead and make sure you're giving us a follow, and of course remember to repost. It does help push the content out to more like-minded individuals. Let's go ahead and jump right down into today's video, kicking things off with the 1 hour time frame. So as you can kind of see here, we are still looking at moving on down. We actually have our target range a little bit deeper in price, down here at 21.77 to 22.9662. So we know that we're looking for this move to the downside. We also have got our existing bear market low down here as well at 22.04. And so we do look like we still have some progression to the downside to go under a 5-wave pattern. We can see that the price action on the hourly chart here is underneath the 50 EMA. That is the red line here. You can also see that the red line is below the white line, which is the 200 EMA. So essentially price action is looking quite bearish, with the short-term 50 EMA being below the longer-term 200 EMA and the price action being below both of those lines. Essentially, it's not giving us a good outlook for ADA on the kind of short time frame. Not looking too great. Now, with last video, I think this was happening yesterday, we were talking about this idea of a move upwards towards 26.5875 to 27.1209. Now, ultimately, this was going to be an area where we bounced up to and then saw further downside. As I was tracking this yesterday, we were tracking a wave 1, 2, 3, 4 with an extension in 5, bounce up and then move to the downside. Now, the thing that's going on here that is of interest to me is that we narrowly missed our entry for a short position. We already kind of had this short position here that you can kind of see in the background. That's one that we'll kind of talk about a couple of episodes ago on ADA. A fair few days ago, we were talking about that over the weekend. I think it was either Saturday or Sunday. Now, as we kind of look at this, we narrowly missed it. We had a wick high at the 26.5575, and obviously our entry would have been 26.5875. So we can see that we narrowly missed it, right? We had the high there just a little bit higher or a little bit lower at 26.5575. So a little bit short. We didn't enter there, for example, but we can see that we're still moving down in this particular pattern. So I'm going to go ahead and remove the yellow box. Essentially, we've bounced up and we're starting to slip back down again. We need to check a few things here. Which will be essentially whether or not we are looking at a 1-to-1, 1.236, or whether we're going to come and slip down into our impulsive structure. Now, for the most part, this particular pattern that's currently emerging here for Cardano makes me feel that we are probably going to be seeing a diagonal-based pattern towards the end of our 5-wave pattern. So our big 5-wave structure to me looks like a diagonal, ending diagonal, or well, it could be ending diagonal, contracting, or expanding. It's too soon to know which one that's going to be, but ultimately it looks like we kind of are in a zigzag pattern moving on down here. We'll see if that kind of play out or not. There's a few different things that it could be, but for the most part, if I go ahead and remove that one, for example, we can see it could be an A, B, and C structure like this, meaning that we'll have a B, C structure moving up, only to come down in a bigger ABC structure. And essentially, if I zoom out of this, you'll see that this will play out as another 3-wave bounce to the upside, followed by a final 3-wave move to the downside. A diagonal like this could be what we actually see within our 5-wave pattern here, of our 5th wave move anyway, down to our target range of 21.7 to 22.9. A little bit too soon to be confident on that, but for now, that's one of the ideas that is bouncing around in my head here based on these current structures that we're seeing for Cardano's ADA. So yeah, that's kind of the hourly chart. We'll monitor that situation. If we get a nice bounce upwards, then it'll be interesting to see where that lands. We should stay below 27.2892 if we are to see this structure play out. If we go up higher than 27.2892, then we're actually still in the wave 4. We haven't actually broken down just yet. Wave 1 invalidation, so wave 4 is not allowed to cross the wave 1, is set at 28.220. So we still are in this bearish structure for now on ADA. Nothing has really changed there. Let's take this up into a daily time frame. As you can kind of see, this is how I'm picturing it at the moment, and it could be that our fifth wave movement in this particular area of our wave 3 is a diagonal, but we still have the wave 4 and the wave 5 to come down deeper, and that will all equate to a wave 3, meaning that we'll have a significant bounce later in the future, only to slip back down into new bear market lows for the fifth wave movement, of which is a C wave structure on a larger time frame, which I'll cover that on the weekly chart in a moment. But essentially, as you kind of see, this would be a zigzag pattern from this higher range here. In fact, let me just bring it in just so you can see it. We have this 5-wave drop. We move up into a B wave, which hits those highs just around the 200 EMA. We get this fake out, move to the upside. We did fail to close in a good position. We slip back down, take the 50 EMA and drop down even further. This is our C wave move. Essentially, it's all on track for approximately the 15 to 18 cent, which I'll talk about in a moment. At the moment, you can kind of see we're just bouncing around down here on the daily EMA, on the daily stochastic RSI. There's nothing too much more to it than that. We are still looking very bearish here on ADA. And that's not to kind of say that the future of ADA is not bright. It's simply just price action. And currently, this is what the price action is telling us through people's behavior in terms of buying and selling. So I'm not too concerned about it. Long term, I think we're fine. It's just a case of this is what's happening right now. We're in a bearish structure. We can see that here. We get to get confirmation of it, but we will see that in time, in my opinion. So everything's kind of playing out as we were kind of thinking it was going to over the last few weeks or so. So let's bring this up into the weekly time frame. This is where essentially we can see the 15 to 18 cent target. That's this yellow box area just down here. It's actually this top yellow box area. It also shows you this resistance. Previous area of resistance that could turn into our support. This is also where our C wave is likely to end, in my opinion, and that kind of leaves us with the Z wave, because it is a bigger structure here on the weekly of a W, X, Y, X, and then Z, and the Z wave is what we're looking for the bear market low to be. Essentially, the Z wave can be many different things. It doesn't have to be the pattern that I've currently mapped it out, and this is the complicated part with Z waves. In theory, we could see anywhere between 7.9 cent all the way to 19.25 cent. I suspect that the 15 to 18 cent is the area realistically where we're likely to see a significant bounce. But, I could be wrong. So I'm going to just kind of caveat this to say that, I'm not a financial advisor. I can't give financial advice. This is just my thoughts and opinions on the data as I see it. And I'm hoping that 15 to 18 cent is where we find good levels of support. We lose that, then I can see us slipping down a little bit deeper. And unfortunately, we are probably going to be talking between 8 and 10 cent if that is the case. And well, that's going to be a fantastic opportunity in itself. That's kind of where we sit. Nothing much has changed from the larger time frames. We only see a few developments on the smaller time frames from yesterday's video. So let's go ahead and bring up our data. Membership.𝗕𝗘𝗪𝗏.io, also linked in the description down below, is our membership website. On our membership website, we have many different things that we offer for our members. Everything from AMAs twice weekly down in our Discord server, through to member-only videos, member-only technical analysis. We do TA on request for trading, and we do so many different things. There's a 7-day free trial across all of the plans. You can check them out, all linked in the description below. You can have a look at all of this stuff. But we're just going to focus in on one thing, which is the data zone and the data zone for Cardano. This essentially is on-chain data for Cardano, and basically it's a one-stop shop for understanding what's going on from the on-chain kind of metrics for ADA. And if I go ahead and bring this up, we've got a few things here. We're going to just jump over to the overview. The overview gives you a nice overview as to kind of what's going on with Cardano's ADA. So we have the all-time high right up here at $3.09. This is USD, not a stable coin or anything like that, but USD. This was 719 days since that all-time high, which just seems absolutely astounding. It's that long ago, but it is. We're 91.7% down from the all-time high, which is good to see because that's great value. It's undervalued in my opinion. It gets a lot of kind of negative press and things, but for the most part, this is where you want to kind of be buying when things are this kind of undervalued, in my opinion. The average gas fee on ADA is 0.33 ADA. That is, it's measured in ADA, not USD. So 0.33 ADA. The average transaction for ADA is, or for Cardano's ecosystem, is actually $33,109. That's the average value of a transaction. There are 53,000 transactions, and it only costs $4,700 to do all of those transactions. So it's quite remarkable knowing that actually the average value of a transaction is quite high and it costs such a little amount to actually transact. This gives us great hope for the future for Cardano. Now, as we kind of move over into the wallet side, this is kind of what we kind of took a sneak peek at just when I jumped on over to the website here. We can, of course, see that there's 10 different wallet sizes from 0.001 ADA per wallet all the way through to 1 million ADA per wallet, right? And there's a number of different counts, right? We're talking about a count of how many wallets have over 1 million ADA. Sits at 2,841 wallets. This is up in the last 7 days, 0.57%. It is up 1.79% in the last 30 days and up 4.49% in the last 90 days. It is up 2.86% in 180 days, but still reasonably flat or down 0.39% in the last 365 days. This shows that we've been accumulating, or specifically certain individuals have been accumulating ADA in 2023. Not so much 2022 as price was coming down. We hit a few bear market low points in 2022, but we've hit the new and most recent bear market lows in 2023. And it's really these lows that are being accumulated right now. So that's 1 million ADA or more. 100,000 ADA or more, there's 24,617 wallets. And again, across the board here, you can see that these have been accumulating for quite some time. So in the last 7 days, 0.16%. In the last 30 days, 0.9%. And in the last 90 days, 2.29% up. And in the last 180 days, it's 3.17. And in 365 days, 5.86%. So we know that accumulation has happened here, even at the 100,000 ADA or more per wallet. 10,000, very much the same story. It's just been accumulated. And again, 1,000 ADA or more also sees accumulation. Essentially, it seems that ADA has backing across the spectrum of different levels of investors, everything from your standard retail investor all the way through to your high net worth individual and institutional player as well. This gives us great confidence in the future and where I think things are going when it comes to Cardano. Now, we have in the news some recent stuff. That's stuff that kind of gets kind of thrown around all the time, but Cardano's strength in numbers is kind of what it's titled. 168 plus researchers defend against centralization claims. Ultimately, there have been a Bitcoin maxi who believes that anything that is not Bitcoin is just a centralized piece of garbage. And in reality of the situation is that there are fully decentralized networks like Cardano versus an arguably centralized blockchain such as Bitcoin. Now, obviously, I kind of have just flipped that on him. I wouldn't say that Bitcoin is in itself centralized, but from certain points of view, you could definitely argue that there's centralized mining occurring, right? It's not as decentralized as maybe you kind of want it to be, right? If you want to be a maxi on decentralization and those kind of things, as the person in this particular article is kind of referencing, then really you have to get your own house in order before pointing the finger at someone else. Now, the best form of defense is usually aggression, as they say, and I think ultimately they're just not happy about things that may be going on internally with Bitcoin. I don't know. I speculate. But I do want to kind of point out a couple of really basic things here, that essentially the Bitcoin model has no longevity to it, not in the true sense. If we start thinking about this, if Bitcoin fails to become very valuable, as in it cannot push up to, let's say, $100, $200, $300,000, which so many people are speculating that it can, but if it fails to do these things, it's unprofitable to actually be mining Bitcoin. You just be losing money trying to do it, right? Specifically as you have those halving events. So you have to have that fueling. You have to have that fuel of Bitcoin to kind of really push up into those aggressive, highly priced ranges if you want mining to occur and to be sustainable. Otherwise, what you'll find is actually Bitcoin is going to become very centralized over time, and it's not going to be that decentralized network that this individual seems to be touting about. So I want to kind of just say, there's differences here between proof of stake, proof of work, and the various different models. I think Bitcoin would be okay for quite a number of years, but if we really kind of think about it over a 50-year period, do we really think that Bitcoin's going to be decentralized? Because I don't. I think it will be very centralized by that point. And let me know what your thoughts are on that in the comments below. In terms of Cardano, though, I think, it's heavily decentralized. You just have to take a look at actually the nodes and that are producing blocks and actually take a look at the ecosystem as a whole. I do think that there are some maxis out there that are just simply not willing to acknowledge what's right in front of them, mainly because they believe in the one thing and they can't possibly change their mind into anything else. I think reality will come around and slap them in the face at some point, though, so it is what it is. Ultimately, this particular article is basically saying how 168 researchers are basically saying it's not centralized and it's definitely not a ghost chain and all those kind of things. Ultimately, the article really is quite loose. I won't go into any more detail. Ultimately, I don't want to give the 𝗕𝗓𝗪𝗔𝗥𝗘's name out in public or anything like that. Essentially, these 𝗕𝗕𝗪𝗔𝗥𝗘s just need to crawl back under their rocks because they really haven't got much to kind of go on. And I can slam, and I have done publicly for quite a number of years at this point, Bitcoin and Ethereum for numbers of different reasons. Ethereum for the obvious, and Bitcoin, well, mainly because its model hasn't really got huge amounts of longevity to it, and it is all about making sure Bitcoin's price actually rises to these crazy high numbers in order to be sustainable. But what if that doesn't happen? We already see diminishing gains over time with Bitcoin. So, we'll read into that a little bit more if you want to. But for the most part, let's go ahead and jump back down into the world of exchanges, right? Because exchanges show us some potential and some concerns, right? These are the things that we have to keep an eye on every single day so that we don't get ourselves kind of caught out by anything like FTX or anything of the sort, right? And so for exchanges, we obviously have liquidation data here for Cardano, specifically $203,000 of liquidations for ADA. Binance is the exchange with the most amount of liquidations at $130,000. 89.65% were long positions that were wiped out, and 10.35 were short positions. Ultimately, Binance sits as 64% of the total ADA liquidations, Bybit at 17.31, OKX at 7.32, CoinEx at 5.91, and 𝗕𝗓𝗪𝗔𝗥𝗘 at 4.29. So is there anything irregular or unusual? I'd say CoinEx have been creeping up the records here when it comes to liquidations for ADA. I do find that a little unusual, specifically when they're above some of these other more prominent platforms such as 𝗕𝗓𝗪𝗓, for example, or OKX and Bybit. There were a couple of instances last week where CoinEx was a little bit too high for my personal liking, which makes me question what's going on at that particular exchange. But like I say, when it comes to exchanges, it's important that we don't keep our crypto on them, and we do actually hold our crypto in some form of cold storage. Personally, I like Ledger, and I do not believe in all that noise that we're hearing over on Twitter and on Reddit and so forth about private keys and backdoors and all that kind of BS that's out there. It's important that you understand what it is that you hold. This is a Ledger hardware wallet, and hardware is the key word there. And if you don't understand what hardware is, then I don't think there's much that I can help you with. But if you are looking and open-minded to understanding a little bit more about this, essentially, hardware wallet is essentially a place that you have to connect, or a device that you have to connect to your computer in order to be able to confirm certain actions on your wallet. So for example, if you wanted to sign a transaction using MetaMask, and MetaMask is connected to your Ledger device, then you're going to have to plug that Ledger device in, put your PIN code in, and confirm the transaction that MetaMask is sending to the hardware. Okay, so if this hardware wallet is not connected to your computer, there is no way that your private keys are going to leave that device. It's also impossible for those private keys to leave that device without you first signing that transaction. Again, understanding what it is that you hold is very important. Hopefully a lot of that FUD is actually kind of dissipated now. It is just a load of noise, but they are planning to open source their software or the firmware that sits on the hardware device itself. That will make it a little bit more transparent for you guys. Essentially, Ledger Recover is a service that you have to opt into, and during that opt-in process, you have to sign up with a monthly fee, I believe, and that monthly fee will require you to basically sign up to it, sign transactions. In order to get your private keys off your device, you have to confirm that you're going to be sending your private keys over using the device itself. And once those private keys are sent to Ledger, they are sharded into 3 parts and spread across 3 different servers and encrypted and so forth. Actually, it's very, very secure. It's not a service that I personally will be taking, but it's a pretty secure service that they're offering. And it's not something that you're going to do by accident either. Obviously, this is the whole point about exchanges here, is that we don't keep crypto on the exchange unless we want to keep it on the exchange for very specific purposes, such as we've got buy orders and we're holding a certain amount of stablecoins on those platforms. But decentralizing your centralized actions as an individual is quite important. And what do I mean by this? I mean, don't just have one exchange. Be on as many exchanges as you possibly can. This will spread the risk. You're not looking to just have all your stablecoins on Binance, for example, when you could potentially spread that risk across many different platforms. Right now, I am on many different exchanges: Binance, Coinbase, KuCoin, Gate.io, Bybit, BitGet, Crypto.com, right? So many different exchanges, and I can spread the risk. I don't have to be overexposed on one particular platform. This is something that FTX should have taught everybody last year. So when it comes to exchanges, 𝗕𝗬𝗪 is my go-to platform. I do 100% of my leverage trading on 𝗕𝗬𝗪, and I do 90 to 95% spot buys through 𝗕𝗬𝗪. I do not keep my buys on the 𝗕𝗬𝗪, and I do not keep stable coins on 𝗕𝗬𝗪 very often, and I don't tend to actually do limit orders very often either. Okay, I move the stable coins when I'm looking to buy, and I buy. I'm not looking at trying to target a very specific number from a spot buying point of view. I have done this in the past though. I did buy XRP at 30 cents before we saw that most recent rally to 93 cents. Right, these are things that I do from time to time, but it's not my normal. My normal approach to this is basically I see moves to the downside. I'm not waiting until it gets to the exact penny where I need to buy. I'm just going to buy it where I feel I have the time to do it, and I'm going to execute it on market. There are a few exceptions to this. I would not use KuCoin or Gate.io for market orders. The bots there just wreck you. Instead, I would use limited orders there, targeting the order books specifically. But I can go into that in a lot more detail at some point. I have spoken to our members about this many times during our AMAs as well. Essentially, though, 𝗕𝗬𝗪 has proven to me a very, very useful platform, very intuitive, very easy to use, and it's place that I actually tend to do most of my activity now. So if you haven't yet checked out 𝗕𝗬𝗪, check it out, linked in the description down below. If you do use that link in the description, you will be eligible for up to $8,000 of rewards, depending on how much you deposit and trade on the platform. Ultimately, I think it's a fantastic platform, and it can quite easily and quickly become your go-to platform as well. So why not go ahead and check it out? But as I say, the important message here is make sure you're registered and signed up onto as many of these exchanges as you possibly can. This, guys, brings me down into the trade element of today's video. Okay, so talking about trades, obviously on Saturday, I think it was Saturday, we kind of put this idea out there for shorting the market into our fifth wave movement. This is not one that I would have entered at the particular point in time. I was actually looking for a bigger move to the upside to take advantage of. I managed to miss entering into this market on this particular short. So we have the example here of what I was talking about during the videos, but it's not a trade I'm currently in, if that makes sense. Ultimately, we are looking at targeting this move to the downside. This is incredibly profitable. If we did enter on the Saturday, from where we actually were talking about this in that video, we've already seen very significant gains around 5.42%. Now, we would not have had a huge leverage position because this is a very big move in itself, about 14 to 15%, right? So a 5x would have been plenty of percentage or plenty of leverage for the kind of percentages that we're talking about here. So a good risk reward here at 2.6. The stop loss is above the wave one low point, basically the invalidation of the fifth wave movement at 28.22. Entry was approximately 26.8, and we're looking at moving this all the way down towards 23 cents. So everything on this trade is looking actually quite nice, even though it's not one I've actually taken. This is just a theoretical kind of purpose of looking at this from the video point of view of where we were on Saturday and where we are today, and we can see some pretty decent moves going on when it comes to ADA. If we do have a nice move to the upside, which I do suspect we will after we have a significant move to the downside here, specifically, if we are doing a diagonal on our hourly chart, there will be another opportunity to come into this short, not quite on the same entry that we were on Saturday, but pretty nice level up here, probably around the 26.49, somewhere around there. Seems to be a nice area where we can obviously short the market again if we wanted to and actually get into this potential trade. We are looking for a move down towards 21.7 and 22.9. That hasn't changed, of course, and everything on this one is actually looking quite nice and quite tidy. Okay, so everything from this kind of point of view is actually looking okay, and there's not much more to it. From our Discord area, we see a few people have been trading a few different things. We got Sui, we got TRU, and we got Matic. Obviously, JB was looking to get into a short on Matic. This was a 30% move when someone who kind of left a little bit earlier. We have seen about 40 odd so percent. Again, these are not massive X's or anything like that in terms of leverage. And I think there's also some interesting developments with some new trades that are also going on in the Discord server for our trader members as well. So again, if you haven't yet checked that out, there's a link in the description to membership.cheekycrypto.io. Why not become a member? It's a 7-day free trial. Just make sure that if you don't want to continue, you go to your profile and you cancel. Otherwise, you will be charged. Guys, I'm going to leave this video right there. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe? Don't forget to join us down in Discord, and I'll catch you all in the next one.